Sweet. So, welcome guys to the Forta X Messari space. We're going to be doing a deep dive into Forta Firewall. I'm Average Joe's Crypto, also go by AGC. Little background on me. I am the enterprise manager at Messari. Cover a bunch of things, DeFi, base layer stuff, and have covered Forta as well. I wrote the report on Forta Firewall and Forta in general back in April. So we're going to go a little bit more. There's been a couple more developments since this report went live. Andy, you want to introduce yourself as well?
Sure. Thanks, Brian. So Andy Beal here. I lead the ecosystem team at Forta. Work almost exclusively on Forta Firewall today, and have been with Forta since Genesis when we spun out of Open Zeppelin in 2021.
Dope. So to kick this off, you want me to just explain a little bit what exactly Forta Firewall is for some users in here who might not necessarily know what it is?
Sure. I'm also happy to do it, but yeah, if you think you've got the pitch down, I'd
All right.
love to hear it.
Let's start with your pitch. You
Okay.
work for them. Let's hear from you.
So for those who, I guess, might not spend their full time in Web3 security, I'll dumb it down and try and talk about it at a high level first. So very simply, what Forta Firewall does is we plug into layer 2 roll-up blockchains and applications, and we screen the transaction flow in real time for security, compliance, and other risks. And more importantly, if Firewall flags something, we have the ability to actually block that transaction. And the ability to screen transactions is relatively new in crypto, but things like firewalls have existed for internet traffic since the 90s. Banks also analyze every transaction that comes in and out for security and compliance and fraud. And so, crypto is sort of the convergence of those two things, right? Internet native finance. And so it seemed very obvious to us that when you use the internet to move money around, a tool like a firewall is absolutely necessary. So most of our users today, our customers today, are layer 2 blockchains. We're also integrated into a few individual DeFi applications as well, more at the smart contract level. But for chains, we plug in at the infra level. So for layer 2s, we plug in at the sequencer, which is where transactions are coming in and where they're getting ordered and grouped into blocks before they get executed and put on chain. So Forta we're situated right before that execution process happens, and are both screening. And then obviously if we find something high risk or malicious, we have the ability to just drop that transaction and exclude it from a block. So I think the best example of something Firewall would block is a exploit transaction. So a hacker is attempting to steal funds by taking advantage of some vulnerability in a smart contract. The hacker is going to sign and send their transaction that's, meant to steal those funds. And before it gets executed on chain behind the scenes, Firewall is analyzing that transaction. We simulate it. We analyze it using various machine learning models, and then we assign a risk score to it. And if the risk score is above a certain threshold, the chain or the application has the ability to drop it. This type of real-time screening is, like I said, fairly new, but doing it pre-execution at the sequencer and at the smart contract level is sort of the new innovation in it. What's cool about that is it gives us the ability to actually block these malicious transactions, which isn't a power that has, previously existed. So we're really excited about that.
Awesome. Good stuff. You want to tell me a little bit more about how Forta Firewall actually does this? How does it know what transaction is malicious versus what's a good one? How does it use AI and the Fortress to actually know which transaction to block and whatnot?
Great question. Happy to go deeper into this. I'll start with a very simple example, and then I'll go to the other end of the spectrum, which is something that most chains and applications today, want to monitor for because they don't want those addresses to be able to transact on their platform. And this is sort of a global standard that applies to essentially any company. And so in that case, there's a list of sanctioned addresses, right? And it could be a terrorist organization or some sanctioned country like North Korea. And so this is a very easy binary check, right? Is the address that's transacting on our chain or interacting with our smart contracts on the sanctions list? It's either yes or no. So that check happens really fast in the background. We do that sort of sub 5 milliseconds, and we return a thumbs up or a thumbs down. So that's really simple. No machine learning involved in that context. So that's the simple side of the spectrum. The other end of the spectrum, much more complex, is analyzing for exploits. And so what we have done over the last 2 years is essentially train ML models to be able to detect smart contract exploits with a high degree of precision and a very low number of false positives. Those are the two kind of elements you're trying to dial in. And so the way we do that is fortunately, most blockchain data is public. And so we have a nice data set of historical exploits that we can use to train a model. So let's say there's 800 exploit transactions that have, that we know about going back to 2016 and the genesis of Ethereum, right? So we take those 800 transactions, and that's one side of our data set that we use to train our model. And then we obviously have, hundreds of millions of legitimate transactions that aren't malicious, and we can use to train the model so that it knows what normal user behavior looks like. And so those are kind of the two sides of the training set. And we use that to establish kind of an initial model. And then every week we're tuning that to account for, new exploits that we see in the wild, address false positives and things like that. So once you get your kind of initial foundational model, it's just about tuning and making that more precise over time, very incrementally, little by little. So that's the complex sort of side of. We also use a very similar approach to detect things like scams. We use models to detect rug pull tokens, to detect phishing contracts that are deployed on chain, to detect fake tokens that might be impersonating something like USDC or BTC or Ethereum, common tokens. And then, we expect to use it more on the compliance side and fraud side too. And I think the reason we need to use it's not a nice to have. The reason we need to use machine learning and AI is kind of twofold. One, when you're screening transactions in real time, you need to be really fast. And so we need to be able to do this in, single or double digit milliseconds. And so doing it in an automated way is necessary. The other reason to use machine learning and AI for this is that we want to be dynamic. We want our models to adjust in real time. And so that the ability to kind of retrain every day is really important because the threat landscape and user behavior is constantly changing, and we need to be able to keep pace with that. And so having something that's more dynamic is also really helpful.
Totally. Yeah, it's a very cool tech. One thing that definitely stood out to me in my research is that it's actually based on past examples and transactions that it's actually screened. It actually does quite a good job. It only has a false positive rate of 0.0002%. Correct me if I'm wrong on that. So it seems like you guys have really fine-tuned this model to really detect everything. And then as far as the need for this, I mean, it's pretty much every other week it feels like at this point where there's some sort of massive hack or exploit or something like that where, after the fact teams are scrambling to try to fix the damage. And a lot of times if, they had something like the Forta firewall and they could kind of prevent the hack or the exploit from occurring before would be extremely helpful for them. Do you want to touch a little bit about, how you see this opportunity and the scale of it? Do you think this is something that, is going to be most chains or at least L2s are going to want?
Yeah, definitely. And, we've been at this kind of real time threat detection, journey for over 4 years now. And one of the learnings that has come out of that experience is that, when you talk to a DeFi protocol or you talk to an L2 and you say you have the ability to, detect malicious activity in advance and stop it. Would you like to stop an attack if if you knew about it? And 99.9% of teams will say yes. We would obviously like to stop that attack because, they want to do right by their end users and their community. I think, that's obviously share that same opinion, which is why we, built the product that we did. And so I think there's, it's, you obviously, historically a big focus on censorship resistance in this industry. But I think as you move higher up the stack and you move away from kind of the layer ones, Bitcoins and Ethereums, and you move up to layer twos and app chains and applications on those roll-ups and, assets, and you start to get into kind of real world assets and more institutional issuers and investors, right? Like risk management just becomes a requirement and an expectation. And so, we're very, very, very optimistic that long term things like Forta Firewall will be table stakes. I think there's kind of two buckets of growth here. One is like on the, more permissionless chain and application side of things. And the reality is for those chains and applications, some percentage of your users are going to be malicious and some percentage of their transactions are going to be malicious. And it's just unavoidable. It's unfortunately why there are still billions of dollars lost every year to hacks and scams. And on a chain like Base, for example, which probably has one of the best reputations, among L2s because of its association with Coinbase, still has a ton of scam activity as an example. So we did some research early this year and, we found that like 25% of new tokens deployed on Base are rug pulls with malicious code. Now that's like you're not paying attention to this corner of the market. That's a shockingly high number, of the token supply on Base. But then when you think about it, like what enables this? Well, Base is permissionless. Anybody can use that chain. Any developer can deploy. Gas fees are super low on L2s. And so the cost of deploying a scam token is basically zero. And then that means the cost of executing the scam campaign and adding liquidity and trying to bait users into that is also near zero. So the barrier to entry for scammers is incredibly low. And so it actually shouldn't be a surprise that like there's this much activity, right? Because where you have TVL and users, you're also going to attract a lot of, malicious actors as well who want to take advantage of those people. And so the larger chains and apps with more volume and users are going to be at higher risk for this activity. So those are teams that, we want to be able to support. And even if they don't want to actually block that activity, all those teams want to know about it. They absolutely want to know about it. They want to track it. So that's kind of one side of the demand equation. And then the other component of it is and this is probably the one we're most excited about because we're seeing the most growth here, is on real world assets and institutions coming on chain. I'm sure a lot of the listeners, see the headlines now, but more and more traditional assets are being tokenized, put on chain. Treasuries have been on chain for the last couple of years, but we're seeing, Robinhood and Kraken announce support for tokenized stocks. And so public equities will be on chain and private credit and, real estate vehicles and things like that. And so, more traditional financial institutions, getting exposure to, DeFi as well as sort of a function of having all these assets on chain just means that the need for security screening and compliance screening and just more robust risk management tools are going to be necessary. And so, using something like Forta Firewall to screen the transaction flow on a real world asset focused L2 or application is a no-brainer for these companies. They have to do it. It's not optional. It's driven by regulation. And so, we want to be at the center of that. And as they come on, we want to be their partner and essentially help them get comfortable doing business on chain by helping them manage their risk because they care very deeply about that.
Totally. Now, for myself, I'm not a RWA issuer. I'm more of a decentralization maxi. What if I'm a user, an honest user as I am, and I get flagged by the Forta firewall? Is there any way that, like, am I just screwed, or can my transaction eventually get through if it's like an honest transaction? Like, how does that whole thing flow?
Totally. You mentioned false positives earlier, and you highlighted that, it's 0.00002, which is translated, one in every, let's say 2 million transactions, we might incorrectly flag as an exploit. But just to kind of zoom in on that number a little bit, what are we typically flagging, and what does our model think is high risk? So it's transactions that are super high dollar value and a combination of a really complex transaction that involves multiple protocols, contracts, where the traces and the metadata associated with that transaction look anomalous. This would not be flagging normal user behavior, right? So for example, like if you were to, send me, ETH from your address, my address, or you were to lock up collateral in Aave and borrow against it, these are transactions that our model would look at and assign an extremely low risk score to. The hope is that activity like this never gets flagged. Occasionally, we will see things like MEV bots, right, that are doing more complex things. Occasionally get flagged as malicious because the transaction looks really complex and there is a huge profit associated with it, maybe. But I think so in those situations, what happens is we are always monitoring what the firewall flags. In addition to it, the customers that we have, we're watching it. And if we identify we call a false positive, which is a transaction that we believe is high risk that ends up being okay. What we do is we label that, and then it immediately goes back into our training data set, and the model gets retrained to account for that false positive. And so we're doing this kind of retraining, fine tuning, you might call it, in real time, all the time. And we also do a lot of protocol specific training. So if we're working with a team like Euler, for example, we will train the model specifically on Euler activity so that it gets familiar with what normal Euler activity looks like and what anomalous activity on Euler might be. We can tune it sort of at that level as well. And the goal is to incrementally approach, a 0% false positive rate, right? We're never going to get there, right? There's always a small chance that you incorrectly flag something, but over time you get a little bit better, a little bit better, a little bit better. And so the friction on on the average end user, should be zero in most cases. If you're an MEV bot or you're doing something more complicated, there's a slightly higher risk that something you do might get incorrectly flagged. But I think our view is that, it's ultimately the chain or the application that decides how they want to manage their risk. And, we're simply enabling them to do that. And, some teams will make the decision that they want to be completely permissionless and decentralized and not interfere at all. And you're going to have other teams on the other end of the spectrum that want to take a much more kind of hands-on approach to risk management. And it could be because they, have a lot of institutional liquidity, or their application is supporting a lot of real-world assets, and they just have, more requirements that are imposed on them. That spectrum will exist. And, we're obviously going to be, the teams on that far end, right, are going to be more supportive of something like firewall. But, we think the choice should be there, for teams to kind of manage it how they want.
Awesome. Awesome. All right, let's get into my favorite stuff, the data and some metrics. So when I wrote this report back in April, Forta Firewall was live on, I believe it was Plume, Mode, and Balmy. And since then, you guys have also integrated with CeeLo, it looks like. So congratulations on that. Um, yeah, let's dive a little bit more into like the metric and stuff. So I'm looking at the Dune dashboard here. It looks like you guys are screening a healthy amount of transactions. It looks to be about just under 2 million a day. Half of that's coming from CeeLo, good amount coming from Mode and Plume. Um, you want to add some color to these, and then like for to date, over almost 90 million transactions have been screened by the firewall, which is impressive. Um, yeah, what do you want to add color to that, or what are your thoughts?
Yeah. Yeah, I think we're seeing the transaction screened, grow rapidly, which is great. And I think, one chain, which is probably categorized on the dashboard as non-disclosed, which we've been excited to with is, Kraken Inc. So that's an maybe, we weren't able to talk about, when the Messari report came out. So really excited to work with Kraken. They've been an awesome team to work with. So, and I think the goal for us by the end of the year is, to be closer to 1 billion transactions screened. I think we think achievable target, especially as, more and more of that demand from the real world asset and kind of institutional side, picks up. We're pretty optimistic we'll be able to onboard a number of those. And I think a lot of those are going to have, real volumes on day one. I think a lot of unfortunately, with a lot of like the crypto native sort of L2s that are just going after retail, struggle to find product market fit. They don't have a lot of, differentiating features. And I think on the asset and institutional side, there's just going to be real volumes from day one. And so, that should be a nice sort of bump, to some of these metrics. And then something that, won't be reflected here as well is, we've started really in the last month more just monitoring. There are teams out there who want to know about high risk activity, but Ryan, maybe they're, ideologically closer to you. They don't want to block anything and censor activity, but definitely want to know about it. Their security teams want to know about it. Their risk teams want to know about it. And so, I think there's a population of teams like that, that we're to, sort of roll out support for. A lot of this is on the scam and exploit side of things too. So that's a whole nother, sort of category of users for the firewall that, I think over the months, we should start to see a lot of volume from.
Very cool. I actually have a question for you because I am unsure of this myself. So the chains that the firewall is live on now, do they all have the same parameters, or do some of them like maybe have like OFAC screening versus some that don't? Are you allowed to give a little bit more color on that? Like if any of them are like a little bit more specialized in what they're screening or no?
Yeah, it's a great question. I can't answer specifically for a chain, but I can sort of talk about it so
Yeah.
yes, it's definitely not a one size fits all integration. So each chain that we integrate with, each DeFi app that we integrate with has different requirements. And so, some may only be screening for OFAC and related compliance risks. Others may be only interested in smart contract exploit screening. Some may be interested in both. And then you have some who may not want to, who might not be interested in compliance or exploits, but they are really worried about scam activity on their chain. They don't want to block it, but they just want to know about it. And so for them, they're using the as a monitoring only tool, and they're getting alerts about rug pulls and phishing attacks and, impersonation tokens and things like that. And there are some teams out there who have some custom requirements. They need something specific. We develop basically a model or a module for that, and it's available to them. And so I think over time, we kind of have a land and expand strategy. So once we get integrated into a chain or a protocol, it's very sticky, and we can start expanding into adjacent areas. So if we start doing security, it's very easy to expand into compliance and scams and fraud and other areas. So that's our approach with every team that we work with. We want to keep finding ways to add more value. We're going to employ that same playbook with a lot of the RWA focused stuff that we do.
Very cool. One of the things I like the most about Forta Firewall is your partnerships with Conduit and Gelato, which basically enable, if I'm like any roll up, to launch having the Forta Firewall. I think that's really cool. You want to tell me a little bit more about like how that all goes down? Like, so basically, if I wanted to launch my roll up, I could integrate with the firewall.
Yep. Yeah, and I guess for those listening who might not kind of connect the dots between a team and a roll up, most roll ups out there have a centralized sequencer, and their infrastructure is run by what we call roll up as a service provider, or a RAS. And so really the roll up is focused more on growth and user acquisition and attracting developers and things like that. And all the sort of deep technical stuff is being done by the RAS providers. Conduit runs at this point probably over 100 different roll ups, and so they've been a great partner. We can with them directly and integrate into one of their roll-up customers. So the roll-up team doesn't actually have to do any work. We've got it down to a pretty turnkey process at this point, where it takes about an hour working with Conduit to plug in the firewall for a new chain. So very easy to add this type of screening to your project. We have the same relationship with Gelato, and we actually just started working with some RAS providers that are more on like the Avalanche L1 side too, like Zeev and Ava Cloud. Avalanche L1s are also Avalanche is really positioning their L1 stack to go after kind of the institutional roll-up market and RWAs, and so our target markets overlap a lot, and so we want to be real close to the Avalanche L1 adoption. So excited about those two partners as well.
Interesting. Yep. On that, are there any other ecosystems that Forta Firewall is looking to integrate with other than like Ethereum rollups and Avalanche L1s?
Those are the two big ones. I guess, within the kind of EVM ecosystem, the two stacks that we see most often are OP Stack and Arbitrum Orbit. And so we've got very repeatable kind of ways to integrate into, those chains. Obviously the Polygon, CDK stack out there, and the ZK Sync stack. And so those are other, obviously sort of all within the EVM family. But we integrate into those chains as well. That's where we see that's where we see most of the adoption, frankly. We kind of let the market tell us where to go. If we start seeing a lot of institutional adoption on other layer ones, we will absolutely spend time there. But again, we'll let them tell us where it's going, and then we'll position ourselves accordingly.
Cool. So we have about 10 minutes left. There's two things I want to touch on before we wrap up. So the first is the Fort token, and then the second is a little bit roadmap stuff. But let's start with the Fort token. What is the Fort token? How does it relate to Forta? You want to talk a little bit about that?
Sure. Yep. So, first generation, sort of Forta was our threat network. And a lot of the threat intelligence that's generated by that network is sold to teams like Binance and Phantom and Elliptic. So this is this side of the the Forta business, independent of Firewall. So the Fort token, originally it's a staking token for V1 network, is still around and still adding a lot of value to also a governance token, and it control of the Forta treasury as well. And so the connection to firewalls, all the firewall revenue flows back into the Forta treasury, and Fort controls how that revenue gets allocated, spent. And, the community has the ability to sort of tie firewall success directly back to sort of token value. So I think we expect that firewall revenue will be used for things like for token buybacks and other things that directly accrue value to the token, so that as firewall becomes more successful and more profitable, most of that value is captured by Fort at the end of the day.
Very cool. Very cool. I know, has any of you been transferred to the is there a timeline for that, or is that still kind of all just a work in progress since the Fortify Wall is a pretty new product?
Yep. All revenue from Firewall flows back into the treasury. So, the revenue that's coming from Cello and Plume and Kraken, et cetera, is all flowing back into the treasury.
Very cool. Very cool. So the last thing I want to talk about a little about roadmap items.
Yep.
We kind of touched up a lot about that throughout the talks, but let's kind of hone in on that. What are the areas that, you're most excited for in terms of roadmap and like future action items for the firewall?
Yeah. I think looking forward, into the second half of 2025, the opportunity we're excited about, is sort of the RWA kind of institutional adoption trend. That is going to drive a lot of demand for firewall, and we are positioning ourselves to be kind of the go-to offering for both RWA focused chains, but also applications and assets. We can integrate into like all three quote unquote layers of that stack. So that just represents a huge bump in like addressable market, right? A year ago we were, probably more limited to like more retail focused L2s and DeFi applications. Now the story has totally changed. There's a whole new segment that we can go after that's, probably going to get much bigger than the retail side that we've had historically. And so, I think our addressable market, probably just 3 to 5x over the last 6 months. And a lot of that's just driven by, a more friendly and clear regulatory environment. I think Wall Street understands crypto a little bit more. It's more comfortable with the risks associated with it. So, just a lot of those blockers have been removed, over the last 6 months. And so there's a huge tailwind there. So that's what we're most excited about, is taking advantage of that. So how do we do that? It's, making sure that Firewall is a institutional sort of grade product. We're highly reliable. We have super low latency, very secure, and also, making sure that we can support their needs. So a lot of it's going to come on the compliance side of things, I think. So we're really building out our capabilities on the compliance and like fraud side of things. And we'll probably continue to invest there. And again, I mentioned it earlier, but kind of having this land and expand approach to growth. So once we get plugged in somewhere, it's very easy to add capabilities. And so that's another way to, grow your revenue. In addition to onboarding new teams, you can just expand your footprint with your existing users too. So, we're going to do both.
Awesome. Sounds very cool. Let's say my last question, 10 years from now, what does success look like for Forta Firewall? Like, where Is this going to be something that's ingrained in every RWA solution? Like, how do you kind of see this playing out over like let's say a 5-10 year period?
Yeah, great question. So I think our North Star here is screening the world's transaction flow. And blockchains are going to continue to suck up a larger and larger percentage of transaction volume. And in parallel, you're also going to have a ton of net new transaction volume that didn't exist before. So, that could be things like AI bots interacting with each other. That's just one example. So just to put some numbers into perspective on this, what Visa does 750 million transactions per day. So the influence, the like tokenization plus, AI means that, okay, there's not going to be hundreds of millions of transactions per day. There's going to be billions, maybe tens of billions of transactions per day. And so, we want Forta to be in the middle of that, flagging high risk activity, helping our customers stay safe, stay compliant, provide a great experience for their end users. So that's the North Star. That's the goal. And hopefully, we're able to do it for the next 10 years.
Awesome. I'll be paying close attention. This is a product that I really like. And it definitely seems to have good product market fit between both, one of the drawdowns of crypto is obviously permissionless. So as we touched upon, that gives risk for scammers and exploits. And then like on the flip side, the more side is that, we have a whole new class of entrants coming into the space with RWAs and real world assets, tokenized assets. And this is going to be a product that specifically fills their needs. So I'm super excited. I had a damn pleasure covering you guys. So thank you.
Yeah, thank you, Ryan. We really appreciate all the support. It's been great to work with Messari.
Of course. Any parting thoughts before we head on off?
If anyone listening is interested in getting more information about Firewall, you can visit the website forta.org, and we'd love to engage with you.
Sweet, awesome. Well, I hope everyone enjoyed this space, and thank you for tuning in.
Thanks all.